across the board. If you even look at all the public companies today, they are looking at having leaner teams, smaller teams, more efficient teams, right? And I'm sure you've been through this in the past. In the last 10 years, Ramesh, I think you have seen a growth at different sizes and shapes. So what do you think has changed, is what I would ask you as well. But in general, I see a pattern, I see a trend where the way we look at SaaS companies or building SaaS companies is slightly changing.
Let's not even talk about sales for now. But within the marketing ambit, we will have a content team. You need a barrage of content, okay? Good quality content that can probably attract the traffic, okay? Right? This content team will be content for your SEO, okay? This content team will be, any of the podcast, for example, that is needed.
When you're looking at more efficient, organization to be run, you cannot also have your revenue growth dependent on, even if you're a PLC company, you cannot have your revenue growth dependent on the number of sales reps, or at least the quota carrying sales reps. That's where I think you're alluding to, right? Which makes a lot of sense, because end of the day, what you're saying is like what we spoke in the previous pod as well, right? You get your sales involved when you have expansion opportunity.
Exactly. Right? Hello everyone, welcome to yet another podcast of Reset to Zero. Wishing everyone, all of you all listening to this, a very, very, very happy new year, a great 2024.
Yes.
Yeah.
Happy New Year to everybody. This is good to be back here, Ramesh, with another pod from our side.
What started as just an initiative between Sri and I to talk about whatever that we've done. I think we as hosts are also maturing.
Wow.
While we come to this podcast, we're talking a lot more about the macro, what we learned about it, and sharing it. And this gives us really good, it really gives us a lot of joy.
Yes.
Talking about this. So this is our first podcast of Reset to Zero in 2024. And hopefully by the end of the year, we can gain a lot more subscribers than we start the year with.
Of course. It's been a learning experience to, for us to start with the pod, which is absolutely new thing. I don't think Ramesh and I have done that before. So thanks for all the support, and excited about the new beginning with the 2024. Ramesh.
Absolutely. With that, Sri, 2024. I have two questions for you.
Yeah.
The first one being, what's going to really keep you excited? Like, what are you looking forward to do in 2024? And the second question is, with new beginnings, humble beginnings that we had to start off in 2023, now coming to 2024, what do you go back to sleep with? Like, what runs in your head while you're asleep?
I think on the top priority, Ramesh, we've been chatting about it. I think I'm excited to be more fitter in 2024. That's what is going to keep me excited for 2024. And on the other side, I think it's been if I just go back on 2023 and reflect on that, I think when we started 2023, it was a little bit dark in terms of, the economy being slow, and then, a lot of wars, multiple wars. I think we ended up 2023 in a very positive note. Of course, we also had our journey as entrepreneurs, right? That's been very positive. I think 2023 in general has been very kind to us in that sense. So humbled about that, and then I would basically take that, the positive vibe into 2024 is what I would say. So how about you?
2024, right? I think let's get on with, continue with your goal of being fit as well. Because at the end of the day, you realize that you can build anything as long as you're fit.
Of course.
And I completely believe in that. You can go to the dumps, but if you're mentally and physically fit, you have the ability to get a jump start and all it requires. So definitely fitness. And given the fact that in a couple of days from now, both Sri and I will be running the Freshworks Chennai Marathon. So either 10K, we'll keep you posted on what the timings that we got. But that's certainly something that I'm looking forward to. And what do I get to, go back to sleep with? Like, what runs is all about high performance, to be very honest, because, we are now 7 of us, and we'll soon become a slightly larger team.
Yeah.
From the bottom of our heart, we really want to thank, the people who joined us, who probably, their families have trusted their decision to join us. So immensely grateful for that. But what also runs is, how do we keep this team going, right? With newer products coming in, with newer people coming in, how I'm personally also excited about creating an organization culture that I'm so passionate about, of the way we should run it, and stuff like that. So that's on the top of my head.
Awesome. So, Ramesh, in fact, just to harp on this one point, Ramesh, I think if you want to make high performers successful or even have a more fulfilling, both the work and the family life, I think there could be the only difference would be the fitness.
Yeah.
If we can get better. And in that note, Ramesh, do you think you want to get fitter to do the half marathon next year?
Now he's pushing the limits. I said I want to be fit enough to get up and run, but it doesn't mean fit. I will take it as it goes.
Let's see.
2025 is where I'll probably answer this.
Let's see. I mean, I'm hoping to do a half marathon to 2025. That's the way I want to look at it.
Absolutely. Right. So getting on with the show, 2023, there have been absolutely no sound of any new unicorns.
Yeah.
No decacons, right? And things have been pretty stagnant in 2023. You forwarded me an article of Jason from SaaSter, talking about the new norm. You're talking about, till you hit $200 million of ARR, what does it look like?
Right.
What does an organization look like? There is a new metric that people are looking, which has it's not entirely new, but that's the focus metric, which is revenue per employee. I mean, you want to talk about what really got your attention in that article?
Sure. I mean, that's an interesting article, right? I think we'll have the link in our description as well. So it is nothing but the revenue per employee, right? Which is getting more popular. If you look at any metric today, which looks at SaaS companies, right? Specifically public companies, they look at this metric more often than in the past, right? So this just caught my eyes when I looked at on the public market, Ramesh, when I was looking at the public market going up, right? And if you can see, there's a trend even in the public market, and the article also reflects the same, where a lot of these public companies are emphasizing on smart scaling.
Mm-hmm. What is smart scaling?
I think it's more of a thinking where you don't just look at growing fast, but you also look at growing in a sustainable path, right? Where you can grow, the growth is very important, but you don't grow at all cost. Instead, you look at your employees' contribution, per employee contribution. That's what it is looking at. In fact, they all wanted to have a lean team across the board. If you even look at all the public companies today, they are looking at having leaner teams, smaller teams, more efficient teams, right? And I'm sure you've been through this in the past. In the last 10 years, Ramesh, I think you've seen a growth at different sizes and shapes.
Speed as well.
So what do you think has changed, is what I would ask you as well. But in general, I see a pattern, I see a trend where the way we look at SaaS companies or building SaaS companies is slightly changing from just growing at all cost to having sustainable growth. Is what I see as a change, right?
Yeah.
And I want to ask you the same question back. Like, hey, how do you see this affecting from what you've seen in the past? How do you think specifically this, the sales and marketing teams are shaping up?
Right.
Do you think things are going to change? Why don't we talk about that for a while?
I'll come to that for sure. I think that's a very important segue, given that usually in a growing SaaS company, sales and marketing just takes the cake in terms of expenses and not necessarily, the way it should be.
Yes.
But for that, you talked about the metric of revenue per employee. Nothing is new over here. I think every SaaS metric in the past, like take payback, take CAC to LTV as a ratio, right? All of them have a flavor of revenue per employee in some sense.
Okay.
But I think as things progress, this metric is being looked upon as a measure of success. And I think it's more relevant also for companies which have probably gone past the 2.5 million, 3 million mark. Okay, rather than, I'm not trying to play safe that it doesn't apply to us. But in a lot of sense, it's important to start viewing this as a metric only when you are revenue, when you're revenue positive, right?
Yeah.
When you start making revenue, right? At this stage of the company, when you're brand new startup, right? I cannot bring in an employee, say, okay, I see this guy as 35K revenue, bringing in 35K, and then he will scale to 200K. It doesn't work that way. Right?
So then before we step back, before we go to the details about team and talking about how we set up and all that, why don't we take a step back and talk about what does this revenue per employee be, right? or at what level does it make sense?
Yeah.
Right?
What's a revenue per employee? Like I said, for us, it probably doesn't make sense. Until you are revenue, until you get, because you have to attain the product market fit.
Okay.
Even before understanding what is working, what is bringing in the revenue. A lot of times you can't start looking at revenue without having a product, right? The second is, if you're a PLG company, how does this entire piece work? That's again a very important piece to talk about. We have seen it in the past as well, that many companies claim to be a PLG company.
Okay.
And when revenue is propelled purely on the back of the product,
Okay.
then you have a very successful PLG company, which means the profits that you generate from the revenue, extra revenue that you generate from the sales, if you reinvest it in engineering, then, and your revenue is growing, then it's probably making real sense.
Okay.
But the moment you say, hey, I have a PLG company, but I will also have a sales team trying to propel, assist sales.
Assisted sales.
So then that probably, this revenue per employee will just shoot up. Really not be a healthy company in some sense. So that's for the PLG company that we speak about. Also, you spoke about the scale. What are barometers of success of what scale should be? I don't know. We are now 8 of us, and we are nowhere near the $1 million, and which we probably achieve eventually. So I don't know what it takes to be the employee size, and I would probably think that an employee is anywhere between $30 to $40 million until we reach at least about $2 million. So that's a good revenue per employee kind of a scale. But from whatever I've read and whatever I've seen, a good barometer of success is when an employee has a ballpark of 200K per employee, and for a greater than 2.5, anywhere between 2.5 million to 10 million mark, then it's a very, very good.
I think just to summarize what you're saying, Ramesh, what you're saying is that, hey, let's worry less about revenue per employee until the time you hit the product market.
Absolutely.
Yeah, that is number one.
Yeah.
That's the number one take, which makes a lot of sense, because most of your investment should go into understanding your customer, understanding what your customer needs, and is your product really matching your customer. I mean, that makes a lot of sense. I would probably put a number there saying that up to 2 million, 2.5 million, this is of a less interest. But in general, we all need to learn to run startups in a lean mode. I think the lean startups would be the norm, because there's also like scarcity of money coming in flow, because we can see larger deals like the Figma, Adobe kind of getting through the cracks and all of that happening, which means that the opportunity for the 10x and the 20x are also coming down for startups and investments. We'll talk about it in a different part. But in general, what you're saying is that, hey, worry about the revenue per employee right from day one, but focus on it after you hit, let's say, your product market fit, or let's say a 2.5 million revenue.
That is right.
That's great. But that's when you start creating multiple teams. In fact, the moment you hit your product marketing fit team, you start creating these specialized teams, right? Like the marketing team would spawn into, let's say, 3 other teams, right? Can we talk about that journey? Now with this mindset.
That's a great, typically what happens is, everyone gets excited when you hit that, let's say, 5 to 10 million mark.
Correct.
And you do that with, let's say, 50 employees.
Correct.
Right? And wow, that product market fit is ready. The people are ready, willing to pay for your product. What then happens is next year there is an AOP.
Right.
You want to double revenues.
Okay.
So, which means you start saying, let's get to the 100 million mark.
Correct.
Right? What ends up is you kind of double the workforce.
Across the board.
Okay. And now when you're doubling the workforce, you start spending digitally, because every manager is not responsible for the efficiency of the employee, which means that has to be a lot of time being spent on training and resources, which means at the end of the year, you are nowhere close to the actual planned revenue. Yeah, and the efficiency therefore comes down. So when you want to double the revenue, you probably are not even anywhere close to half of it already. So that's the problem of scaling revenue proportional with people.
Right. So in that case, Ramesh, there was in the past when we looked at this growth, we looked at doubling, tripling, all of that were applied. Those frameworks are applied, and a lot of these things made a lot of sense. right?
That was double to the unicorn.
Yeah, then you kind of have more people and try to solve the problem, right? Now with the new norm of running lean startups, having sustainable growth, how do you think, founders or even, companies growing should look at setting up, let's start with the marketing team.
Yeah.
Right? Let's take an example of a product-led,
Sure.
product. And now let's just go through, how do you think people should look at product, the marketing itself in general? How does the marketing team, because it makes a lot of sense when you're growing, you need to add more the R&D resources, because that's an area where you'll have to keep investing. Otherwise, you cannot add more capability, you cannot sustain your customers. But let's talk about places where teams get bloated.
Yeah.
And I'm not saying that marketing teams get bloated, but that's an area where we can easily bloat, right? As a team which is growing very fast, right? Now, can you just break that into pieces,
Sure.
right? When you look at marketing teams, how do you see the marketing team structure going forward, at least from what you have seen?
Okay. As you asked me this question,
Yeah.
I'm already thinking about the multiple marketing teams any $100 million company would have.
Right. Okay.
You talk about, there's a marketing demand generation team.
Okay.
And there is a paid marketing team. There is a organic marketing team.
Okay.
There is a customer marketing team.
Okay.
There is a brand marketing team.
Okay.
There is PR.
Okay.
Then there is product marketing.
Okay.
And then there is a piece of design that comes as part of, marketing design. That's a big. So we're already talking about 8 to 9 marketing teams.
Okay.
But where does this all funnel into? At the end of the day, what should be the responsibility of these marketing teams, which is only demand generation?
Okay.
And at some level, talk to the customers and then event marketing, field marketing, not to leave them alone.
Then brand marketing.
Brand marketing. So all of this is just to increase the top line, increase the revenue. What ends up happening is we are looking for people across the industry and saying, hey, we are the experts, we're already a $50 million or $100 million company. Let's get these because they have probably done it in the past. I would flip it. Those are the days when you probably had unicorns, decacorns coming, but right now there are none. Okay, so I would flip this at High Performer maybe and say and have till at least we reach a $5 million runway or maybe even 10. I don't know. Purely looking at two perspectives. If you have product-led growth, which means you have a huge amount of traffic that comes into your website, you give them a superior trial, and then they convert. Which means let's not even talk about sales for now, but within the marketing ambit, we will have a content team. You need a barrage of content, good quality content that can probably attract the traffic. Okay, right? This content team will be content for your SEO. Okay, this content team will be, any of the podcast. For example, there is leader. Okay, this content team will also look at the format of content, so the design, everything to be a part of it. This content team will probably be looking at newsletters. Okay, right? And there are various kinds of contents that needs to be put up, and you have a small content team. I don't know, and each of them is not a niche. You have to wear multiple hats to do this.
Okay.
So that's the content team. Parallel running to that is the distribution team.
Okay.
Now distribution of this, because when you produce content, you got to distribute it. Otherwise the content is just sitting in a nice website with no one coming in.
Right.
Now distribution team will have SEO experts. Okay. That's a separate team for sure. Okay. And then you also try and put it in the listicles. Hey, which is possible. So that's a mix of a little bit of link building with listicles, external and then internal link building, which happens in SEO. You also have distribution through ads. So ads team is contained within the distribution team, because ads is just a faster way to accelerate what's already working, right? And then this distribution team is probably looking at G2 crowd, Quora, answering questions, putting anything out there. So fundamentally, I'm only talking about two teams. That there is no need for a product marketing person/team right now until there is a product market fit that is gained. And this content and distribution team, when you obviously have that, okay, you're wearing multiple hats of already speaking to the customer.
Okay. So
and when you get the inputs from the customer, either it could be from a build perspective, it could be from a content perspective or distribution perspective, these people can, and now you have multiple tools as well, Sri.
Yeah.
It's no more that, you have to write everything on your own. You have GPT, which assists in really good generating the ideas for content. You just need someone who can edit it much faster. You have multiple tools for podcasting, for example, right? So the time taken to complete a task is much lesser than we probably thought. To be very honest, all the designs that we put out for the marketing, no, I'm not trying to brag, but Canva is a fantastic investment. And I'm able to get out really very good pieces of marketing material out there to put it out there like banners or anything, right? So it's a good mix of both tools, and then you also have these snug teams, small teams working together to get a stuff.
Functional teams, outcome-based.
Absolutely. And tracking, obviously, we talk about MarTech for a startup in a different part, but this is what is needed. You do not need the barrage of marketing teams to think that you're only up the market.
So what you're saying is that if you're a startup, right, somebody like us, who's trying to grow, we got the product out, we're trying to figure out the product market fit, or somebody who's just got the product market fit, I think my takeaway, Ramesh, from what you mentioned, is that keep functional teams like the content team, distribution team, maybe demand gen. But what you're also saying is that utilize tools like Canva, maybe the Hyperpon of the world or the GPTs of the world. And also, you're subtly saying that everybody should get more hands-on.
Oh, yes.
Yeah, that's what you're saying. Because you give an example where you are using Canva, right? And try to create, the content for yourself, right? And for your team, right? Which is basically...
what I'm trying to say is there is no one person who's responsible for distribution. Every person in the organization should be distributed. As they do it in their own fashion, what works for them.
Interesting. I think that's one way to get more efficient, because I'm also seeing this in the last, I would say 12 months or so, right? Where we are trying to be on our own on most of the things we're trying to do. And probably it's possible right now. I think it's the same thing, because I had run a company startup in the past 10, 12, 13 years back. It was very hard, right? We didn't have the same amount of tool set. We didn't have the same tech. But right now, I think, Ramesh, I can totally see from where you're coming, right? There is also tools and frameworks available which can also help you get more efficient, be more hands-on.
Yeah.
As the result of which, you will end up having lean teams, right? And outcomes can be much better. That I think looks like that's what you're trying to alluding to.
Really, and there is a joy of rolling up your sleeves and doing it yourself to start. Because one of the bigger reasons why I'm a part of the startup is to not let go of what the latest technology kind of brings in, right? I don't want to let go of that. So I want to kind of roll in my sleeves. This is a great joy of putting out your testing, works, video. So
I also didn't realize that, Ramesh, you have, such a good design skills until recently. So which is great. But Ramesh, just continuing on the conversation, right? You also mentioned about product-led growth, also sales-assisted sales, and also you mentioned about marketing. Can you put them all together, right? And tell us, let's say, we also see today in the market, if you go look at the public market data, you will see that some of the product-led growth teams are not having efficient numbers on the revenue per employee.
Correct.
And can we just delve a little deeper, one step down, and can you understand why this is happening? You also mentioned about sales assistant teams being larger. Can we just go deeper and talk about that? Hey, what do you think is happening right now? And what do you think will happen in the future? I'm talking about future, meaning in the next 6, 12, 18 months. When you're a product-led company, right, how do you approach the sales-led teams? Or how do you approach a combination of marketing and sales-led teams?
Right. This is probably what future would, this is a vision that we have to have a really world-class product-led growth company on the lines of Atlassian or even maybe HubSpot, I don't know. But to answer your question, a truly product-led growth company doesn't necessarily need a field assist sales team. There isn't need an assisting sales team.
Okay.
Imagine this, the economics of it, right? If you hire someone to assist sales, and if you're looking to grow, let's say, to the next 5 million,
okay.
If you have to get someone, you probably give them a dollar value to go after, which is, let's say, $2,000 or $3,000.
Okay.
Which means each of them are capable of bringing in a month about $3,000. So in a year, they do about $36K in revenue.
That's you're talking about inside sales.
Inside sales.
Is it same for any inside sales across Geo, or
I would assume that in a PLG driven company, when you have a sales assist, that would be
in the ballpark of 50K type? Is what you're
50K,
saying.
right?
Okay.
Maximum on the whole 50K. Now, how are we going to? And you're calling yourself PLG. So, what's the role of the product-led growth as a philosophy versus the sales team? They are going to clash against each other.
Okay.
Because you're expecting that someone comes in beautifully, does the trial, and then you're also expecting this person sitting next to them and try to reach out to them and say, buy them. Right? So, in some ways, it's broken.
Yeah, can you just pause there, Ramesh? I think you're talking about something which has become the norm in the last, I would say, 12 to 24 months, or in the last 3-4 years, where they put us a free trial, and then we also have to engage with the sales or customer facing team, right? Are you saying that something needs to be relooked at?
It absolutely needs to be relooked at.
Okay.
It absolutely needs to be relooked at, because don't call yourself a product-led growth company,
okay,
where the revenue is not led by the product.
Okay.
If you're still dependent on the sales team to look at it, but the model is very different.
Okay.
Yeah, you do not need to have, and especially when you're selling in the US markets like US, it's best to call yourself a sales company.
Sales-led.
A sales-led one company. You'd rather follow what Salesforce does.
But just to take a step back, I just want to well deeper, because you're bringing in things which is standard today in a lot of SaaS companies today, which are probably inbound PLG-led, where when there's a sign up, you will see an email going out from a sales rep, asking if they need help. And there's going to be a cadence around that, things like that happens. Now, what you're saying is that, hey, you don't want that to happen, right? So, at what stage do you think a sales rep should get?
See, okay, let's take a step back over here. What I'm also thinking as you ask this question, Sri, right, is when you are doing a product-led growth, your expectation is that someone who comes in will buy the product.
Yes.
It's like a point of sale.
That's right.
So when you have a point of sale, the value of the product should be so attractive,
right,
that they are ready to swipe their card then and there.
Okay.
Right? It's probably like even a trial that they're buying it to test it out. They may churn faster as well. But at that point in time, the success is if they're able to swipe their card.
Okay.
It's the product's responsibility to try and take them to the next level, and that's where the loops and funnels kind of participate, which we've spoken in product growth. Now, for a $100 product, if let's say the example we are selling, if we have an assisted person to sell to that, if you have to set up that person up for success,
right,
and to get probably $3,000 of MRR with a $100 product, they have to sell to 30 people.
Okay.
Now, where is the pipeline that they could go? And then you're literally trying to shoot yourself down.
Okay.
And to say, so that's my first point.
Okay.
In saying that, this is not wrong. But given that amount of competition that SaaS companies have taken in itself, the number of tools that are there,
of course,
one big differentiating factor is the price point. So you start bringing in the lower price points right now. If you are PLG, if you are
with the right value,
in the right value, then you probably have to let the product do the growth part of it. The assistance can come when the customer grows in stature within the organization, when they're buying multiple tools, when there is upsell, cross-sell. And there's a customer team who's probably trying to
make sense.
So I think that's where the crutch lies. I'm not against this model because this is what is always given success, but just given the amount of SaaS companies out there, trying to, having price as a differentiator, where prices of tools are going down,
yes,
right? We are offering 50% discounts for the new year, right?
Yeah,
so in that case, I cannot have a sales team trying and selling our product for $100 as against.
Makes sense. Also, Ramesh, what you're saying makes sense with the way we are looking at the business as well.
Yeah.
When you're looking at more efficient, organization to be run, you cannot also have your revenue growth dependent on, even if you're a PLG company, you cannot have your revenue growth dependent on the number of sales reps, or at least the quota carrying sales reps. That's where I think you're alluding to it, which makes a lot of sense, because end of the day, what you're saying is like what we spoke in the previous pod as well, right? You get your sales involved when you have expansion opportunity.
Exactly.
Right? And you let the customer see the value for themselves use your, free tools, free options, trial, or you call it whatever you want to call it, whether it's premium or a trial, get them to the point where they realize the value of the product. I think in the last part, I think Ramesh gave a very good example about Canva.
Correct.
Right, where Canva would get you use the product, you get addicted of using, being able to create like Ramesh, where you could create content for yourself.
Correct.
And then they start charging you for a higher value, right?
Yeah.
And then you get into a team and all of that happens. Now I think Ramesh is trying to get their team into a Canva, right? Things like that happen. So that is basically is a norm, is what you're trying to say, which is great. So now, which kind of gets you to the next question, right? Ramesh, there is this whole product-led growth. Now you're talking about having efficient, teams running around that.
Yeah.
Now, when you connect them together, right? What's your good example for companies which are doing this well in the current state of affairs on the market?
I think we've spoken about product-led growth companies. We've spoken about Atlassian. We've spoken about Grammarly. We've spoken about Canva. Even in our
correct. But give us a few examples which get these two things together well, because not every company gets these numbers well. Company which does product-led growth efficiently, but also has good numbers on per revenue per employee.
I wish I had the numbers on the head. But I would think a company probably like HubSpot is again a great example where, they are targeting lower end of the spectrum in terms of, right? They've even reduced their prices further down, right? For their sales and marketing automation. Where that is just allowing you to go and try the product. But the sales assist happens in slightly bigger deals, maybe with, and that too they go with their partners and not necessarily an inside sales team. So they could be a great example.
Interesting.
Come out to just to say, how do I assist this to do much faster? I do not have the insights.
So that makes sense. HubSpot is a great example, Ramesh. I think I could second that, given their product-led growth coming in from the marketing. We spoke about that in depth in the previous part, where they are started off as a marketing automation tool.
Yeah.
The way they kind of get their expansion going with a CRM or a sales module itself is a good, to say, a flow, a pattern in it. So, which is interesting. So let's kind of do a summary, Ramesh, right? I think if you want to just put them all together, right? There's a lot of hype, there's a lot of kind of noise around the new metric.
Yeah.
But do you think this will also kind of change the way, I know the public companies have changed.
Yeah.
Now, do you think that will change, that will percolate to startups as well?
See, you started off on a statement, I'm not sure how many of you heard it, which is there are very few exits that are happening in businesses these days.
Right.
The Figma, Adobe, it's still in fray. You don't know whether that's going to go through. That's an exit that probably...
I think they just called it off.
They called it off.
Yeah.
Which means companies that are extremely profitable, they're not going to let go and seek an exit ASAP, right? They probably want to run for a longer time, grow their revenues. Now, with that in place, every business is also, there are only two ways to say, hey, I want to hit a revenue mark, which means you say, I want to become a $100 million company or $1 billion company, which means you will not necessarily seek an exit. You would only try and grow it more efficiently. For companies that you have a fantastic product, but the product market fit is already there,
right?
And there is a competition pressure for you to do, and then you seek an exit. Right? In these two cases, either base, I think going behind the revenue per employee as a metric really helps in both ways, because one, it helps you scale much faster. You're in the path to profitability. You're looking at it. It's within in your line of vision. You want to get to that very quickly and then make it a really profitable company. You become a company that people look up to, right? So
Ramesh, when you say exit, I think you mean 10x exits, right? Which
10x
typically drive investments, right?
That's not happening in it.
So which means that there is a good chance that the SaaS specifically, the segment, or at least the innovation segment, would become a risk capital, right?
Like that.
Typically there's a good chance for that to happen. The way people would be perceived as a risk capital, and then as a risk capital, typically if you look at it's a smaller portion of your entire investment, the portfolio, right? Which means that we should expect less money coming in as well.
That is already happening, right?
No, I'm just saying because the whole model might change. If you look at even a venture capital model, right? The VCs are looking for investments which can give you the 10x return, right?
And so you say VCs, I think those days are...
No, but So the whole framework might change. Like for example, if you look at Figma, Adobe, they probably were a $20 billion, I would say acquisition deal. And then by the time the Adobe shares went up, it was almost a $30 billion deal. And it was called off, right? Now, if you look at Figma, I think I also kind of heard the same thing from the Almost part. If let's say Figma goes out and does an IPO, which is
quite a big
a 40% growth company with about the 800 million in terms of revenue, very healthy metrics, everything, they would be pegged at a maximum of the 10 billion. So the opportunity for a company like Figma to exit at 30 billion is not there today. I think for various reasons, which means that I'm sure a lot of investors, right, from employees to investors to founders, none of them are optimistic for this anymore, right? So that might change the paradigm. Only time can answer these things. But anyway, given that this is just, we are sharing our thought process, we are not saying this is what is going to happen. There is no certain way of anything can pan out in the future, but only the time can answer that. I think that's where the 2024 is going to be very exciting. We got LLM models coming in, new models coming in, AI really making a lot of innovation. The SaaS companies are going to have a different framework for growth. Exciting time, Ramesh.
Absolutely. This is a great start to the year. Just talking about this kind of puts you in a state of mind where you say, okay, how do I run this company so efficiently in a couple of years from now when people are looking at us with closer eyes. So I'm really looking forward to 2024. And let's build a PLG company, Sri.
Yeah, awesome. I think with that note, we'll see you on the next part and have a great year ahead.
Thank you. And all of you, have a good rest of the year. Happy New Year once again.
Thank you.
See you.
See you guys.